Exponential Finance, the podcast covering finance, technology and innovation, from our home in Japan and beyond. Swissquote Bank specializes in online financial and trading services. Based in Geneva, it is the first FINMA-regulated Swiss bank to offer crypto trading, custody as well as crypto asset equity certificates for retail clients and global institutions. Today, we welcome Chris Thomas, Head of Digital Assets at Swissquote Bank. Prior to joining Swissquote, Chris has combined his financial expertise with his passion for entrepreneurship as head of European innovation at Fidelity Investments, before successfully founding an institutional crypto asset custodian.
Chris, good morning. How are you?
Morning, Norbert. Pleasure to meet you, and actually good evening for you.
You're responsible for digital assets at Swissquote, which has been around as an online bank for a long time.
It has. In fact, we were the Swiss pioneer. We came to life 24 years ago. The two co-founders who are still running the business today, they started building this FinTech type product. And 21 years ago, we got our full Swiss banking license. So over that time, we've been able to accumulate over 3 million products, tradable products on the platform.
So is this primarily a bank or primarily a broker? How would you describe it? Or are they equal weighted product lines?
A FinTech bank, a FinTech broker. Yeah, I mean, we were the pioneer, the innovative bank broker a way back. We then were one of the first into the FX markets with the institutional FX. We've got a huge amount of structured products that are tradable. We've got other companies' products as well. And we were the first and probably the first regulated bank in Europe to move into crypto space. People could trade crypto on our platform, whether they be retail or institutional, in the middle of 2017.
Wow, that's really early.
Absolutely, yeah.
And now you've got the Sabars and the Signums coming up and saying they are the first crypto banks. And so You're the first bank that started with crypto. It's a bit of game with words and how you position it, I guess.
It's interesting to see their propositions, and it's fantastic to see more coming into the ecosystem. And especially when you look at what's happening around Switzerland, the real positive energy, the structure, the infrastructure and base layers that have been built. And now the challenge is moving it all forward in a positive manner. And frankly, is the global ecosystem ready for all of these kind of niche players who have emerged? Only time will tell. But at the moment, absolutely, they are up and coming challengers.
With such a long history of 20 years, clearly you have an existing client base, customer base that trades with you. And when you started off in 2017, how much traction did you get from existing clients?
So that's quite a tough one for me to answer because I wasn't there. I joined in February this year, so like 10 months ago. But just taking us back to why did Swissquote get into the market so early, way ahead of everyone else? If you look at Paolo and CTO, one of the co-founders, Mark, the CEO, the other co-founder, they both went to EPFL, which is École Polytechnique Fédérale de Lausanne, basically one of the two best engineering schools in Switzerland. So they come with that engineering mindset, solve the problems. And a way back, they saw blockchain and thought, wow, this is an amazing idea. This can solve a lot of financial services problems. And then you develop that thinking a bit further, and suddenly you go, these crypto products, we could offer them for our clients to trade on our platform. And that's how we became the first into the market. That journey is close to 5 years today. People within Swissquote, therefore, every single department has got touch points on the crypto. And so we've got nearly 5 years experience within each department, including at the sort of the institutional level, which is, it's fantastic. Clients would obviously have looked, and some of them at the time would have been like, what is this crypto thing? This is just a bubble. But it offered us an opportunity, and you did see it wasn't just the so-called millennials who were taking on, because a large subset of the Swissquote client base is the 40s, 50s, 60-year-olds, professionals and ex-professionals in Switzerland. So you've even got that mentality who quite often have some spare cash to trade, some of them coming into the market. And clearly nowadays, more of them are comfortable because they've been clients of Swissquote for a long time. Ultimately, they trust Swissquote. So if it's a new exciting product and there's enough volatility and something exciting around it, then these people are there often for that reason.
So you said you joined about 10 months ago. Did you step into the role of somebody else, or was it now after 5 years in the market, actually this role finally had been created?
This role was created. Swissquote, as we've talked about, first into the market, did really well. And then I think there was a bit of silence, bit of a lull through the bear market where not a lot happened internally either. The same as everywhere else. Obviously, there was still a lot of trading happening, but not enough energy. And luckily then Swissquote saw the moment, actually, we need to start building out this institutional proposition. We are getting institutional clients approaching us. By the time I joined, we were already way down the road and had a track record, and do have a track record with WisdomTree. We custody all of their Bitcoins. So going through that process, and to think that before I joined WisdomTree, or you could replace that with another asset manager or several institutional clients, and us have been discussing and working out building operational processes that really make sense between traditional world and crypto world. Traditional middle and back offices are used to a particular way for settlements, clearing, monitoring risk, and so on, and suddenly they're thrown with these crypto assets. And so we have to normalize this and create secure and trusted environment for them to be able to comfortably allow execution of these assets.
What always is a discussion point in the institutional conversation is the custody question. How have you approached that part of the equation?
If you think back, custody is the foundation layer of which everything is built off. Given that we've got 20-something years of banking, we're used to using HSMs and all of the IT security layers. By the way, we do have a large IT security team and they understand these problems. So bringing them in to solve and to build upon their experiences to encase our crypto ecosystem, that has got to be the most important thing. And as I spoke about with the discussion with the institutional players, create those operational processes on top of the hardware and the standard cold storage techniques that exist in the market, and obviously the cyber controls. Everything's super important. So creating that whole safe and trusted ecosystem for our institutional and retail clients to be able to confidently store their crypto assets is important.
So specifically, given that this business started 2017, where you didn't have any custody service providers that are really only now emerging. By the time you started, presumably this was all built with your own technology.
There were elements of that. And then around about 2 years ago, I believe, we started bringing in third-party technology. And then, as I say, adding on our IT security, adding on our operational processes, wrap that into a new enhanced product. Crypto storage is part of our solution. That's a journey which we're evolving. And you've got to think as well, what are the requirements next year, in 2 years? How do we position our technology and every processes, our system, to be able to adapt and go with the flow? And again, to make sure that we're always pioneers in this space. So yeah, we're constantly thinking about that problem.
One of the things in trading with institutions is actually making them trade on the crypto markets, whether it's the cash markets or the future markets. And future markets are easy as long as we're talking, right, the regulated market, CME, for example. The other alternative is to securitize these products, and the European markets are pretty adept at that, as is Hong Kong. So if you get a ETN, ETP, you do quite a bit of that as well, whether that's your own product or somebody else's, which can then be traded like any other security on Swiss exchanges.
I think that's what Europe, especially, and I guess Asia as well, I'm not too familiar with the Asia space, but the European space is very good at. Where you've seen the US, they're constantly fighting to try to get an ETF, and the regulators are unsure about custody, they're unsure about market manipulation. There's still a lot of questions, but there's a lot of people pushing to try to solve it. And I think we'll see a breakthrough there. But in the meantime, Europe is probably way ahead. The primary certificate structure is around the actively managed certificates. Now, just so that people are familiar with them, the difference between an ETF and an actively managed certificate AMC is the ETF is off balance sheet, the AMC is on balance sheet. On balance sheet means you've got the credit risk of that issuer. In Swissquote's case, you've got to understand the credit risk of Swissquote. Just give you a bit of background on that. We are obviously a regulated Swiss bank. We have been for a long time. Our tier one capital ratio is one of the highest in the market, 22%, which shows how risk averse we are. So if you look at the credit risk, yeah, you could argue that it's extremely low. So to effectively go into our Bitcoin AMC or our multi-cryptocurrency AMCs, you can largely forget about that credit risk and look towards the underlying structure of that. And that's obviously wrapped with the certificate wrapper, which then allows it, and it's stamped with an ISIN, which then means that you can trade it on the SIX Swiss stock exchange as a normal certificate product, similar ways in equity. There's several providers who do that as well, so it's not just us. I think it's a really interesting space, but it's very, very young. And I don't think there's an awareness out there of these certificates and how easy it is to use. Because if you think about whether it's the mum and dad's type aspect who want to buy crypto but are scared of the how do you custody it, the fees on top of it, what happens if you lose your password and so on, or the institution who has similar problems around trusting custodian but could go to the futures route. You solve these problems by using an AMC because you can trade in and out on a daily basis if you have to, although I wouldn't recommend it because of the fee layers, it's too expensive. But it allows you to confidently just buy a certificate on a centralized exchange and know that at some point, 6 months, 12 months, 2 years' time, if you want to sell that certificate, bang, done, out of the game. It's far more straightforward. It's a really nice solution, yet a lot of people still don't know about it.
You can structure them in any way you like. You can do really funky stuff inside. The products that you specifically issue, are they still relatively plain vanilla, or they're like some knock-in, knock-out exotic features bedded in?
For the time being, they're very vanilla. For me, the interesting thing, and I say to some people, and I keep racking my brain, how can we make these even more innovative? I say to people, if you really, really want us to structure a product for you, we can model that, but we have to be sure that there's enough inflow into that to make it a viable product for us to be able to model. But if you came to me and said, I really want a product with 20% Bitcoin, 30% Tesla, 5% Google, you create a really funky basket. You can take those 5, 10, 20 assets, put them into that basket, wrap it with the ISIN certificate or the MC wrapper, put it onto SIX Stock Exchange, and away you go. That can be done fairly straightforwardly in a matter of weeks, you're out there. And then you take that process a step further, 2, 3, 4 years' time, when you do actually have the tokenization of assets and that world really genuinely does exist. Robots could be automatically creating those portfolios for you, whether it's 5 assets or 3,500 assets tailored towards your needs, because that robot really understands you, because they've got the machine learning and everything on top, and they've looked at your history, your 20 years of history, your risk profile. There could be millions and millions of these type solutions existing in 3, 4, 5 years' time. But just now, absolutely pretty vanilla.
Switzerland with Crypto Valley was very early in the crypto game, simply because quite a few of the large protocols had chosen Switzerland as a domicile for their foundation. It seems like we're getting now the next wave, as you mentioned, tokenized securities, security tokens, digital assets, whatever you want to call them. For your business, you have this as part of a vision for sure, right? Where a smart contract becomes a security and also all the asset servicing functionality you can build in there.
We get approached on a very regular basis from companies looking to create security tokens or tokenize their assets. We speak quite often to the digital asset exchanges. I love a lot of what I see, but we're just far, far too early for it. That said as well, the other thing is that a lot of the projects I see, I go, wow, you guys are great entrepreneurs. I love what you're doing, but where's the tokenization aspect? Why try to tokenize a super exclusive Ferrari when one rich person will buy that and put it into storage to sell in 5 years' time? Well, what's the point? Put it into an SPV, get rid of it. Don't waste your time or the cost doing so. The other challenge is I was speaking to a family office recently around a real estate project. They looked, it was a commercial real estate project in Switzerland. And the guy said to me, well, why should I buy into this token when it's going to cost me 6 to 7% to get into it, when I can go into the commercial real estate with $2, $3, $4 million of my fund money for a lot less than 6 to 7%? It doesn't make sense. It's a great concept, but we're just not there yet. I think that's really the challenge globally. We're in that early phase and we need to get through it. And these companies have got to survive that. It comes back to the thinking again as well. You know, crypto banks is a fantastic concept. Can they really survive that 1, 2, 3, 4, 5 years of fairly low revenues until that inflection point happens when these become normalized assets and the ecosystem becomes exponentially bigger? Yes, it's a real challenge for them.
How does this add up to the 6-7%? Promise of the technology obviously was that it is more efficient and it takes friction out. The 6-7% would prove that the traditional markets might be far from perfect, but they're also not as inefficient as some people want to believe.
By the time you start adding in technology costs and then lawyers' fees on what are still fairly small projects, and then all of these extra third-party fees, suddenly if you're looking at a small investment being 10, 20, $30 million, as opposed to several hundred million, then yes, the fee structure does become quite expensive. Obviously, that's going to commoditize significantly as things standardize, as you say, about the smart contracts. The costs will get ripped out of these things and it's going to be easier to create and issue and obviously a lot cheaper.
You also have international offices. Are these representations or have a banking license in the other jurisdictions as well?
We've got 10 offices globally, from London through obviously Switzerland, Malta, Luxembourg, where we recently finalized the complete integration of Internax from acquiring 18 months ago. And then obviously the Middle East, Singapore and Hong Kong. And yes, we do have licenses and several different types of utilizations. Most of these offices are maybe 10 to 15 people. So collectively, we've got over 800 staff globally within Swissquote. We've got a fairly decent B2B business. We have global clients. As long as the clients are high quality, come from decent jurisdictions, and they meet the Swiss regulatory standards or exceed the Swiss regulatory standards, then we can entertain or look towards entertaining that business as well. We've got assets and clients fairly worldwide, both retail and B2B.
Clearly, Middle East and then Singapore are very prime destinations for family offices and high net worth individuals.
The way the geopolitical scene at the moment, Singapore is becoming more and more significant as the Asian hub. Added on top that MAS are really pushing hard and have been for 3 years to be the FX player and the crypto player. I mean, Singapore really is such an important jurisdiction. So it's fantastic that we've got a presence there as well.
Singapore is a nation run as a business, and you don't find this very often anywhere else in the world. You alluded earlier a bit to the older generation that has disposable income or savings in the first place and can put a wager in for these exotic assets that become less exotic every day. How do you see that evolving with the older investors?
If you look at anyone who's trading with Swissquote, is trading because they're comfortable with trading anyway. So they've already got over quite significant barriers to entry. And then the next question, what is Bitcoin? Institutions are clearly, 90% of them are way past that. I think probably 15, 20, 30% maximum of the retail client base are now comfortable with what really is Bitcoin. We're still not absolutely near the majority. We're kind of crossing the chasm into the early majority just now. And I think we'll definitely cross that over the next 6 to 9 months. But anyone who's currently trading within Swissquote is already comfortable with, as I say, with trading and getting comfortable with Bitcoin. You've got therefore two types of traders. You've got the buy and hold trader, and they're still coming into the market looking for that 2, 3, 4 year period. And then you've got the traders who just like it because it's exciting. And they're the traders who always trade FX, because there's a lot of similarities in the volatility between the FX and crypto markets. So you get them coming in. If you look at the type of trader who would trade on the Swissquote platform or any other institutional platform, they ultimately don't care about your underlying technology. They don't care what data centers you use, whether it's Amazon or Microsoft or another one. They don't care really about blockchains. What they care about is trading the cryptocurrency of their choice on a trusted environment, a system which they know is safe and comfortable for them, and a system and ecosystem which gives them a great experience. That's the most important thing for them. So if they get that and they can trade the Bitcoin or Ethereum or anything else, that's why they choose partners like Swissquote.
We see there's thousands of different coins out there, and you need to be somewhat selective in what you actually take onto your platform as well. What are the criteria that you apply, and what is the population that is tradable on the Swissquote platform at this point?
We kicked it off way back in 2017 with 5 coins. We've expanded up to 12 coins now. We don't just take the top 12 because we currently have a policy of no stable coins. That may well change slightly through the course of the next 6 months, because we are seeing more coins that would meet our standards. Privacy coins, absolutely no way. That takes them out of the equation. And then it comes down to a combination of what do our clients really, really want, what do our clients know and they're comfortable trading, where there's enough volatility, but yet enough liquidity. That is so key. And also, who's behind the project? Are these people, really a genuine, proper business, or a startup with ex-MIT graduates, and they have proper experience, and we have a high certainty or probability that they will exist in 2 or 3 years' time? We build out our structure and our thinking around that. But yeah, it's got to make sense for the clients. We've got to be able to execute. If an institutional client even comes to us with, who knows, even $1 million order, they've got to be able to execute at a good price, at a sort of best execution price without slippage. So we bring all those factors into consideration as well.
Similar along those lines, do you only have the brokerage business, or you also run an OTC desk, especially for the digital assets in parallel?
So we're actually in the process of building the OTC, and that complements our API. So we've got fixed WebSockets coming in the next month, which is fantastic because we've got a lot of institutional interest with current clients and with future clients who really, really want to gain access to that. I'm super excited about that. I've been bashing my head against the wall. Hurry up, we need this. And finally it's coming live. And that's going to allow our institutional clients to get, instant access to the best aggregated liquidity and the safest liquidity out there. Yeah, super, super excited about that coming live.
For those of our listeners who don't have the institutional securities experience, right, the fixed connectivity is what you use in the traditional market. So what you're saying essentially is that systems that understand the fixed protocol that are deployed in the traditional markets can, without many modification or enhancements, they also trade crypto on your platform because it uses the same protocol. And that just lowers the barriers for entry into this market so tremendously.
The way to think about it for non-tech people is, whether you're an institution or a retail person, if you want to log into our platform to do a trade, you would put your username in, you'd put your password in, then you do your two-factor authentication process. You'd get access to the platform. You'd then select the, where's Bitcoin? Okay, click on it there, buy it or sell it. That process obviously takes a period of time. If you're an institution, you don't want to be doing that. So effectively, you have a direct open connection straight into the live pricing of Swissquote's operational deck, and that goes straight into your office, into your hedge fund or asset management office, straight into your platform. So you've already got that. You don't have to then log into the Swissquote platform every time. You just instantly trade as you would be trading on for your equities or your FX with any other bank or asset management platform. So super fast. You can go in and out if you're a high frequency trader, or whether you want to trade 10 or 15 times a day or 3 times a day. Far easier. So I think with regards to Bitcoin, you've seen, especially over the last 4 or maybe 5 months, the quality of the institutional players starting to come out and into this market. You've seen the names, even the Druckenmiller and Paul Tudor Jones and Mohamed El Arian talking about it. The way the market is moving, it's not moving on retail FOMO. Retail FOMO is not here yet. Will it come? Yes, it probably will, but it's going to impact us in a different way. I don't think we'll see that exponential tick up. Yes, we'll see probably somewhat exponential tick up, but not to the same way, because it's now not driven 95% by retail. It's driven 80% by retail. And then the sell-off will probably be not as bad as what we've seen previously. And again, it comes to higher lows. Will the markets time nicely with the equity sell-off, and that will be the kind of trigger to cause us to sell off? It's quite possible, fast forward 6-9 months. If so, where does Bitcoin go on that journey? Because we're now at 500 billion AUM. More and more institutions are comfortable. They're talking about it. They're talking just now about the Q1 or 2021 strategy. As the market gets bigger, there's less reasons not to be in it. So they have to start buying Bitcoin, which gently keeps squeezing us higher. You've seen PayPal arguably have squeezed the market higher in the last 2 months. Grayscale are now over $10 billion, just suddenly like an extra 4 or 5 billion in the last 6 weeks or something. That there is taking the whole amount of Bitcoins that are being mined every day. So new institutions are then having to take Bitcoins which are being sold by people who have been holding long term. This just creates an absolute squeeze. And it's really interesting, and nobody really knows where it's going to be in 1 month, 3 months, or 6 months. But these factors tend to point out that it's not going to be a 20,000 and crash. It's not going to be, probably not going to be 25,000 and crash. Retail will get in at some point, but whether it's 25, whether it's 30 or 35, we've just got to keep assessing on literally a day-to-day, week-by-week, month-to-month basis, and take a step back and analyze it. And as you say, analyze versus the equity markets and work out when this flash crash is going to happen. Another thing I'd point out in this, the crypto crashes, you always see a lot of buying of put options just before the crashes. And I suspect that comes from the miners out of Asia, collude with one another to buy lots of put options. They then smash either the futures or they sell off the physical. They then take profit on their put options and they buy back into the physical, or they just take the profits because they need to use that for their OPEX. It's crazy how the market's operating, but at least it's becoming more and more institutional, which means less volatility and more regulation, safer, far better, trusted, more democratic. It's a far better place to be. And it means that, we are clearly the early adopters. Who knows what the markets will look like in 5 years? When we look in 5 years' time, look back at what we have been through in the last 4 or 5 years.
Great positive outlook to conclude on. We're not putting out any target prices, but I think our listeners got a good perspective from you, what's going on, and that many of the players who've come in recently, they will keep holding these things. And so the supply in the market is getting lower and it becomes a supply and demand game. It's always been that. The outlook is positive, and we'll take a checkpoint next year, Chris, with you, how positive we are.
Absolutely. Yeah, no, it's been an absolute pleasure having a chat, Norbert, and thank you very much for your time. And yeah, I look forward to catching you face to face, hopefully at some point next year in Tokyo.
That'd be wonderful. Thank you very much, and take care. Stay healthy and in good spirits.
Likewise. Thank you. Cheers.